Good morning, guys. How are we all doing? How we all good? So today I came with a bit of a different video. Just going to speak on how to manage a running trade. We're going to speak on how do you approach the market if you've got an unclear bias on a higher time frame. We are going to speak on entry triggers, your candlesticks, which candlesticks do you need to see for you to enter the markets from your pin bars, your doji, your engulfing candles, and your inside bars, which is the famous for. And we're going to speak on how we approach risk to reward and knowing the number of pips or the average pips which the asset you trade moves so that you can successfully use risk to reward to your advantage and the exits of the trades. So without wasting much time, here we've got German 40. So if you know us, we trade German 40 usually in the mornings. So today we came to the charts and we know that it's pre-NFP day. So if it's pre-NFP day, the best thing is do not trade. If you trade, your trade, you need to use half your normal risk or your trade just has to be short term. Okay, that's for pre-NFP day. Personally, that's what how I approach pre-NFP, and I've realized that it saves me a lot of unnecessary losses. So on pre-NFP day, you usually want to sit on your hands, but if you do see a setup or if your trading edge presents itself, you just want to use half your normal risk on your particular trade. So before we get into the charts, I'm just going to show you some quick notes. March 6 on the setup we had. Let me just open this one for now so that you can see what I'm actually mentioning. These are the same things we share with our mentorship group as well. So I'm going to zoom in so that you guys can read. Right, so if you see here, this was today. We were waiting for a setup to present itself. This was 10 a.m. the London Open. So as usual, I had my eyes on German 40. And you can see this is the setup I had. And I also specified we are using half the normal risk because it's pre-NFP day. The chances of a setup playing out are usually low. So we are using half the normal risk on the trade. And the entry trigger was going to be a break of the I wrote break twice, but it was the break of the black line, which you see here on the charts, which was also a short-term buy. So we're going to jump into that setup now, and I'm going to just explain a few things. Hopefully, it will be able to help you guys in your trading. So again, what I want to specify is not all setups are going to play out to the TP, and you should know your days, know your fundamentals, know what's going on before you enter your setup. So our daily, I would say I was still bullish. I still had the bullish bias. And excuse me, I was still looking for price to get to 23,500, 23500 on German 40, which would be the new all-time high. So I would say that was my bias, but then at the back of my mind, I know today it's a low probability day to trade. So if we do get something, I was simply waiting for my entry criteria and to get a short-term trade. So if you notice on H1, when I was on the charts, price was somewhere here prior to London session open. So usually my trading edge appears right on the 13 EMA. So again, if your trading edge is not present on the charts, do not trade. Otherwise, you should take your trade with half your normal risk, like I said. So seeing that this was the case, I also paid attention to the previous day and I noticed that price was actually coming back towards the previous day's high. So that was my point of interest right there. So came to M15. So pre-London, this was the move, this retracement, which is the week you saw on H1. Then this here was an order block, right? So anything below here, we're selling. Anything above, we are buying. So what happened when the London session opened is price actually wicked below the order block and came back above. So in here, this was where my entry was. So I was already looking at this as a rejection of this yesterday's high support. So I'm just going to walk you through my state of mind in what I was looking at. So I had a bullish bias, a potential bullish bias, but my trading edge was not 100% present, which means this was not a high probability setup. This was a low probability trade. So once I saw M15 rejecting the bottom here, I then jumped to my 3 minutes to now look for my entry triggers. So what are the entry triggers? My entry triggers are the famous four candlesticks which we use, which are I need to either see a pin bar, I need to see an engulfing candle, I need to see a doji, any form of a doji, and I need to see an inside bar. If I see any of these four candles on my point of interest, that's me executing the trade. So I need to see either a pin bar engulfing candle, which will be bullish engulfing if I'm buying and bearish engulfing if I'm selling. I need to see a doji. I need to see an inside bar. And all these candles have to happen on or near the 13 EMA in the direction of my bias. Okay, so after we got this bounce off the previous day's high, the next thing I waited for was my entry trigger. So here I managed to get the bullish engulfing, and I had to wait for the next candle to form, showing me a bullish move. So if you saw, this is where I put my black line right on top of this candle, because initially it was green, then it started to turn bearish. So I had to wait for this break just to confirm that I'm actually bullish. So what was my target here? My target initially was 23,500, but at the same time, I was looking to my left at this level as a point of interest. So a break and a retest of this level would have confirmed and turned this low probability setup into a high probability setup. So as price is moving, these are all the things which are going on in my mind. All right. So price started to push. We got here, we retraced. So at the top here, this is where I actually exited, because I think I was either just above halfway towards my target, or I had reached what I wanted to take for that particular setup. Then price came back to the 13 EMA and gave another inside bar here, or a doji. So at the close of this candle, you can still enter here with the stop loss just below the entry trigger. And your TP again here, you would have been aiming for this previous high and still looking at 23,500 as a potential TP. So for this to be valid, prices to break and retest. You get it? So before something happens, something else has to happen. So in your mind, you need to know, or plan rather, for your trade, so that when price is moving, you already know how to act or how to approach your trade. So what it ended up happening, price took out this high. Then we had a major shift, came back and closed below. Then price started to deliver to the bottom side. So if you look on your H1, we actually have a week, I think, on the H1 candle somewhere there. And price is starting to deliver to the downside. And you can see here, we've got a doji and a pin bar. So if you're selling, you could have sold here with your stop loss above the entry trigger. And this trade right now would have reached almost 1:2, and you could have taken profit right on this level. But I'm not going to talk about this. I just want to mention the trade which we actually took. So to make everything a little bit clear, or to bring everything together, I'm going to show you the setup here. So the other thing, if you're trading indices, German 40, US 100, US 30, US 500, you need to understand your points or your pips. Even if you're trading currencies or whatever you trade, you need to understand how your asset moves. Is it measured in points? Is it measured in pips? And on a move, on an average move, what's the number of pips you need from that move for the setup to be valid? So if you follow our day trading mastery course, you know that on indices, we always aim for 100 points, right? And 100 points is our default. So either you're aiming for 100 points, or you're aiming for a risk reward of 1:3. Whichever comes first is what you take, right? So if your setup is going to reach 1:3 here, that's perfect. If the 100 points is above here and your 1:3 is here, the setup ends here. Whatever is above here is just a bonus, right? So I hope this is making sense. So you need to know exactly how many points or pips your asset moves for it to be a successful setup. This is just a way of you avoiding losses, right? So as much as you understand the reward, you also want to cap your loss at a certain number of points or pips as well, depending with what you trade. So with indices, like I said, for us, it's 100 points. The risk, if we've got a risk of 50 points or less, that's a perfect setup. If it gives you a reward of 50 to 100 points, that's also a good setup because that gives you a risk to reward of 1:1 or 1:2 on average. Then, ever since Trump got into office, though, there's been a bit of a bigger range in terms of pips. So anything above 100 points is usually a bonus. So, like I said, 10 a.m. was the London session open. So now we're including the timing aspect. This is our trading time. So during our trading time, price hits the previous day's high here. We had a bullish engulfing. So usually I can even enter here sometimes with my stop loss below this candle. But now the reason I did not choose that entry, I'll show you now. In terms of pips, this stop loss was going to be almost 90 points. So like I said, you want to keep your stop loss at least around 50 points or less, depending on the setup, of course. So I had to wait for the next entry trigger, which was a breakout of the zone. I decided to put my stop loss here. I could have put it here also, but I decided to put it just below this level in case price wanted to trickle back into this order block here and then push up. So your stop loss placement can also vary depending with your entry trigger, but I would advise you to just put it below your entry trigger candle, which would have been here. So now you notice if I had used that particular stop loss, my trade would have been something like this, like 1:2.5, which is not bad, right? Okay, so let's take that off. And again, our target is always, it has to be at least within the range of 100 points. So if you measure this, you notice that this was 100 points right here. Right here. This was 100 points. So if you're in a setup, whether it's a 1:10 or 1:, what, if my price reaches 100 points on indices, for me, that's a successful setup. I can even collapse the whole trade right there, or I can scale out most of the positions. So it's either you scale out the whole trade and collapse it or close it because you've already hit a successful milestone. Or you can use one of the other rules we have. So our setup here was 1:2.43. So within this move, the whole move was going to be approximately 160 points. So which means my halfway mark was at 80 points, right? So this is the other way you can use to exit your trades. So this was my halfway mark. As soon as your setup or your price hits 100 marks, 100, sorry, hits halfway through your setup, you want to move your stop loss from where it is and put it on break even right here or just above your entry or right on your entry. That's where you want to put it. And you want to scale out some of your position. So for example, if you're aiming for a 2% on this trade and your trade hits 1%, like if you're on a prop account, would you not want to take 1% and call it a day? Because on a prop account, the average targets are like 5%, 8%, 10%. So if you do this 5 times, you can pass. If you do this 8 times, you can pass. If you do this 10 times, you can pass. Right. So if I take 1% here, for me, that's a success. Or you can close half the trade. Right. So instead of going for the full 2.4, 3%. Once you get here, it will be around 1 point something percent. So you can actually close a full 1% on your trade and just leave the remaining percentage running. Maybe it might give you an extra 0.5% if price continues in your direction, which is still way much better than walking away with a loss. So let's do a practical example. Let's say I had entered here and I was watching my price. I got here. This is very close to my target, and I've already reached 100 points. But then, because of greed, I don't close or I don't move my stop loss, you see that this price would have come back now and taken me out here. So if my risk was 1%, now I'm walking away with a negative 1% instead of walking away with something or a break even. At least I'm walking away with a negative. So this has to be your realistic approach to charts, because remember, it's not every setup which is going to move towards your TP. It's not every setup which is going to hit your TP. Sometimes price will get right here, then they'll just collapse. Price will just drop, go all the way to your stop loss. That's why we introduce these methods of trade management. And again, this varies from setup to setup, because on a normal day, if it wasn't pre-NFP, then my trade would have been going maybe for a 1:3, right? But then I already knew coming into the day, which was my plan. I already knew today it's usually a no trade day. If we're trading, we're trading London session. And if we do trade, it's a short-term trade. And if it's a short-term trade, we're still going in with half the normal risk. So all these rules which I have for myself, once my trade is running, I need to make sure that I stay true to those rules. I stay disciplined. I follow those rules. So at halfway, either you collapse the whole trade or you take away half. If you've got multiple positions, you can close some and you can leave a runner. That runner which you leave, your stop loss comes just above break even or just above your entry. So that if this retracement comes, takes you out here, that's perfectly fine. Then if you get another re-entry here, like I showed you on the M3, we had an entry here. So that means now this setup would have been looking something. Okay, so let me just clear the chart since I've explained everything here. It simply means that setup would have been looking something like stop loss goes below your entry trigger and you're aiming for this high. Remember the high you're aiming for. Sorry, this previous high which price it left. So this was going to be a rest reward of 2.6, 1:2.6, which is still not bad. Again, if your price moves halfway towards your target, so halfway was somewhere here, you want to close some, move your stop loss from here to just above your entry, which is break even. In case price decides to just turn, you don't end up losing something. And again, you want to go for realistic moves. Yes, we're saying price can potentially get to 23,500, but it's showing us that it's not going there. So if your price is showing you something else, just follow what your price is showing you and trade accordingly. Then for the sell, if you're looking for shorts, you can see after this break of structure, we had an order block here. So now again, we are not chasing price because we are already done for the day. This is the order block, a break of market structure here, a liquidity sweep at the top. So liquidity sweep plus break of structure, order block, price continued to push down. We still found support on yesterday's high. If you notice, we're still finding support here. We're still finding support here. This is yesterday's high, by the way. So when you came back in here, what's your entry trigger? You're looking for the famous 4 candlesticks, either a pin bar, a bearish engulfing since we're selling, a doji, or an inside bar. So initially we got a nice pin bar there, followed by an inside bar, followed by a bearish engulfing. So now if you're selling this, it's a short-term trade. You're still trading probably above the 13 EMA, but this is almost like advanced trading. So you need to have your setup looking something like this, and you're aiming for the previous day's low, which would have been a 1-to-1. Although I wouldn't advise you to take this, but I'm just showing you what candles to look for, what zones to look for, and where you actually have to exit your trade. So I believe if you plan your trade, trading will become a little bit easier. You actually avoid so many losses. So you never want to see a winning trade becoming a loss. So I think this is what I wanted to share today on the setup we took. Always know how to manage your trade. Plan your trade first, then trade the plan. Always move your stop loss to break even once your trade moves to halfway towards your target. Scale out some profits or otherwise have a monetary value target. So a setup might be showing you 1:10. For example, a setup, let's say a setup is showing you something like this, and it's 1:3. but your dollar amount, maybe your target was, let's say, $100 here. If you reach $100, why wouldn't you close? Because your dollar amount target was $100. The thing is, sometimes price will push and you don't move stop loss. Then it will do this and you end up losing that 100. Instead of taking your target, you end up losing it. So I hope this little lesson I did helped you. If it did help you with your trading, please state in the comments there what you learned from this video. If you trade NFP, pre-NFP days, please let us know. Do you trade the Thursday before NFP? Do you trade London session? Do you trade New York session? What assets do you trade? Do you have a certain number of pips you aim for? Just write in the comments there. Let's have a nice little chat. Let's get to know each other and how we trade. So apart from that, I think that's all from me today. I'll try to maybe link a video maybe on the candlestick trading bible, or just drop it right here so that you guys can just watch it. Maybe after you watch this one, then you can understand how price actually moves. So apart from this, enjoy the rest of your day. Good trading.